macro trends, deciding where the tailwinds, headwinds are, and then from there, deciding where to allocate cash.
Right.
Very much why my channel exists is to talk to people like you. That's perfect. So,
that's good. Yeah, thank you.
Yeah. So on that thread, Marianne, I'll pass it back to you. What's catching your eye right now as the most significant macro trends that you feel people should be paying attention to?
Well, we feel that the best markets right now, and we think they have a great future and for the months ahead, the years ahead, is gold, silver, and gold and silver shares. Those are our top picks. And, obviously inflation is now picking up steam. But basically, they've been in bull markets. Gold's been in a bull market already for 6 years. It's just been a gentle, rise. And so now we think these markets are about, we think it's actually already starting. They're starting to take off. We think they're going to be great investments because they are the traditional inflation hedges, but also because people are going to be looking for what to do, because we feel that the stock market is probably very close, if not already, at a major top. And so once that happens, it's just going to be even another incentive for people to turn to safe havens.
Yeah, no, I'm with you on that. And Pamela, I'll go to you for this. Were you surprised? I guess if I look at the macro trends over the last 18 months, you could have said they were supportive of the gold narrative that you're talking about, but it was a pretty flat market. It was pretty quiet, really, until maybe October's inflation numbers came out. And then all of a sudden it was like a bit of a trigger point, right? And we started seeing some price action and all this. So were you surprised by that, the stillness of the market? Were you surprised when October's numbers came out and gold's price started to move a little bit, or is this part of the thesis and as expected?
Well, we never go so far as say we expect things, but we do have a growing tendency of feeling that it's ready to go up. Like we know that it lasted, like the decline lasted from August until March, which was a good while everything else was soaring. Resource was soaring, energy. So gold looked even worse, and silver even worse than gold. So those things were really out of favor. And then they started bottoming so slowly, but really not out of its normal pattern. That's what we see. It was not out of its pattern. It was just that it drug a couple of months longer than it should have, that it could have, and that. When it started going into fall and it was still lackluster, then yes, it did get a boost from inflation, but it was something that we saw growing and ready to go. They're ready to go. So now we're seeing if this leg up in the bull market is as strong as it should be at this time. But we're watching it closely. But yes, we were very happy with it, but not really surprised.
Okay. Now, Marianne, I'll go back to you. What do you make of the inflation versus deflation debate? And I know what side you land on, but I suppose my question is, how do you counter the points like, broad spectrum corporate insolvencies, decrease in discretionary spending? These things are very deflationary, right? Technology adoption of new industries, dropping price points. These are deflationary events that are probably all increasing right now and will increase dramatically in the next 2-3 years. So how do you counter those points when you're talking to a deflationist with your inflationary beliefs, and talk to me about that a little bit?
Well, that's interesting because actually we do expect more inflation, but all those items you mentioned and many more are deflationary. So, or at least slow economy, perhaps a recession. So that I should have been more specific. Our outlook right now for the next year and maybe longer is actually stagflation, which is inflation combined with slow growth, which we're already seeing. And that growth is so slow internationally that it could tip into a recession. And from there, it could, kind of snowball downward more so. This is all something we're on the alert for, but we think inflation will be kind of the dominant factor.
Got it. Okay. I'm with you there. Now, what do you make of the MMT discussion, right? This is something I'm trying to understand more thoroughly is MMT. And could you explain that to my audience a little bit, Marianne?
Well, we don't pay that much attention to it. We don't think it's realistic. And I don't know, we're just, we more so follow very much what the Fed says, what the Fed does. And these modern, if you want to even call it modern, theories, techniques, ideas, we just, until they become more developed or more mainstream, will we pay more attention to them. And for now, we'd say it's just kind of chatter.
I appreciate that, because it's so easy, isn't it, to get caught up in the headlines, which are always super sensational.
Yes, very much.
Yeah, and it's very distracting. And so the hardest part I find as a retail investor is like, how do you cut through the noise, right, and get to what's actually occurring?
It almost drives us crazy that, like I said, every day we're seeing what's happening. And then you see, oh, there's one little thing that happens, or so-and-so might say this, or they did say that. And everybody jumps or reacts or discusses it. And it's just ridiculous.
Right.
Yes.
Yeah. Yeah. Now,
investors are jittery.
Super jittery, super reactive, right? Very speculative right now, probably more so than ever. And I know you've written on that, right? We're seeing, probably peak or close to peak speculation in the broad equities market. Would you agree with that?
Right.
Yes.
Okay. So what does that tell you?
Well, see, the stock market for the last more than a couple of years, there's been a lot of Fed influence in the uprise. And so with so much money loose in the system, it could go higher. I mean, it could still have a blow off. It hasn't had one really yet. It's been rising, but blow off hasn't really happened. And that's what people expect at a peak. But it may not have one. It may just turn around at some point. Like someone was talking in the financial market on this morning, saying that the wave 4 of the COVID is ready to grow. It's already growing in Europe. It's already growing. And so that could be a really big one. This time, of course, that's the last thing we all want to hear, but they are saying that. And if that were the case, then definitely we will see the stagflation slow down even further. And we'll see what happens. But there's something that's going to trigger the market to at least have a downward correction, meaning 10% or 15%. It hasn't had that kind of correction for since 2009. And so we are thinking we are in the last final stretch, but if it lasts longer, it lasts longer. We just can't measure that kind of money going into the market all the time. And so we're just a cautious bull is what we are. And we are in the market a little bit, but yeah, we see that.
Interesting. Now, when you say you're in the market a little bit, what are you looking at things outside of precious metals? That's where we started today, but anything else on the radar, Pamela?
Well, yes, natural resources for sure. We think that a wide commodity move is in process of developing. We think even though gold's been rising moderately, but rising for 6 years, we think all the market now is up, especially since this past year, since November last year. We've been seeing the natural resource take off. We see different parts of the energy sector going off the charts. In fact, uranium is a wonderful investment now on the green energy front, and we really like the resources. We like them a lot. We like all the infrastructure that is going to be using those companies' materials. We really like those, like U.S. companies, since U.S. will probably use U.S. So like different big companies that are there, we really like them. And so, yes, we do like the resources much equally. And one thing that's interesting with the wide commodity rise, which we haven't seen in many years, is that they don't all have to move at the same moment. One can move in 6 months and have a big rise, like a leg up. The other one's quiet, but they're all in a major uptrend. And this is what we're already starting to see. It's already happening. And people say, oh, well, copper was flat, well, energy was high, but that's kind of not that abnormal within a major bull market. So we're very excited about it, in fact, because it is a wide open one, even with the agris as well.
Got it. Now, when you're looking at the precious metals equities, are you focused more today on either domestic supply or countries that have friendly relationships with the US than you used to be? Is this an increasing part of your thesis, Pamela?
What, do we like US companies more?
Yeah, I guess, what I'm seeing from my seat is that investors are becoming more critical of jurisdiction. They're less keen to look at maybe up and coming developing nations where there used to be a bit more upside because of that risk. But that appetite seems to be decreasing in favor of friendly nations with more predictable and stable governments, swap line nations, all of this stuff. Do you factor that into your thought process?
Oh, definitely. Oh, yes, especially COVID really brought out the worst in all the emerging or developing countries. They have it really hard. Some of them have been hit so hard. Others are just hit and don't have the capability as the developed countries to defend themselves as well. So yes, I would say that is definitely rising. Friendly countries to the U.S., to the North America, to Canada, and we think that's definitely an issue that's happening now.
Interesting. Okay, now walking through a variety of commodities, Mary, maybe I'll pass it to you. Looking at precious metals, base metals, anything alternative, off the radar. Where are you most excited for 2022?
The precious metals. And I just wanted to clarify one thing. When Pam was saying we're just a little bit in the stocks, she was referring to like the Dow Jones type markets, the traditional stock market, because we are heavily invested in the gold and silver shares, specific ones that we like. And as she mentioned, a lot of the resources. So we kind of put those all in one basket. And that's where the majority of our recommendations are right now, along with gold and silver.
Got it.
And platinum, actually.
And platinum. Okay. Now, can you walk me through? So here's one of the biggest challenges that